What is going on, YouTube Nation? This is Dark Dividend, and if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, two of you guys mentioned two dividend stocks that I really like. I actually did a review on one of them, and another one I never did a review on, and I actually like it. It's pretty cheap, and it's a high-yield dividend stock. So, I'll go over these two dividend stocks. I'll do a stock analysis and dividend stock analysis, and also do a review on these guys. You got to hit that notification button, smash that like button. Let's check these stocks out right now. In this dividend stock that you mentioned, WU is a symbol. Western Union, this one grabbed my attention that you guys mentioned for me to check out. One, it's not doing too well against the S&P. Two, it has a dividend yield above 3%. It's at 4.94%. PE ratio 9.65. Volume 4.42 million US dollars. The market cap is 7.54 billion. Year range was 1569 to 2661. Its day range was 1902 to 1970, and its previous close was 1983. What do these guys bring to the table? I'm like choking on water. Literally chugged water and I'm choking on it. So let's check this out. Let's make things easier, okay? And by the way, in the comment section after this video, let me know what stocks you want me to do a review on. And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. But I enjoy doing these videos for you guys. And let's check this out. So Western Union Company is an American multinational financial services company headquartered in Denver, Colorado. I went on Wikipedia. They made it like 10 times easier. So, founded in 1851 in New York and Mississippi, printing telegraph company in Rochester. The company changed its name to the Western Union Telegraph Company. The company dominated the American telegraphy industry from the 1860s to 80s, and then basically Western Union began to move its business away from the communications in the 1980s to focus on money transfer services. The company ceased its communication operations in 2006 and now is the second largest money transfer provider in the world. So, okay, that sounds great. They changed, they adapted. How are they doing revenue-wise and dividend-wise? Let's check that out. Okay, so 2015, the revenue, this is in millions US dollars, 5,483, 2016, 5,422, 2017, 5,524.3, 5,589, 5,292, and then 4,835. That is basically because of the pandemic. You can blame the pandemic. And then 2021, 5,070. So one thing is they're kind of stagnant, okay, from 2015 to 2021. I do like an increase in revenue. When I go over bank stocks like KeyBank or Huntington Bank shares, you're seeing an increase in revenue. I don't see an increase in revenue with these guys, but their dividend history is very attractive, and they're less than $20. So we'll go over that. That's one thing that makes these guys a solid dividend stock is their dividend hikes. Their revenue is kind of stagnant, but the board of directors are pretty much putting their foot down saying, we're increasing that dividend. So 2014, it was 12.5. Then 2015, it was 15. Then 2016, it was 16 cents. Then 2017, it was 17. Then 2018, it was 19. 2019, it was 20. And then 2020, it was 22 cents right here. And then 2021, it hit 23 cents. So it's $19, has a dividend yield of 4.85%, a PE ratio of 9.65, and an annual dividend of 94 cents. They're a pretty well-known company. That one is definitely on my radar. Once I start travel nursing, I'm going to try to get to a lot of dividend stocks that are cheap like this and have high dividend yields and increase their dividends over time. If I can get to 200 shares with a stock like this, I'll be rolling in the long run. Throw in 200, get 200 shares, leave it alone, then move on to the next thing. So this is definitely on my radar. I appreciate the shout out and the tip off for me to do a review on these guys, because I really like the way these guys look, and they're above 3%. They're not doing too well against the S&P. Revenue's not too bad, but they are a pretty well-known company. So I'm going to give you props on that with giving me a recommendation to do a review on them. So I think they're a solid dividend stock. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. Let's check out the next dividend stock. And here's another one that was a great catch and one to Check out Dow. DOW is a symbol, Dow Chemical. It's sitting at 68.50 with a dividend yield of 4.09%. PE ratio of 7.45, a volume of 5.12 million US dollars. The market cap is 48.93 billion US dollars. The year range is 5207 to 7186. And again, the day range is 68.24 to 71.23, and the previous close was 69.51. So what do these guys bring to the table? Obviously chemicals, but what type of chemicals that make these guys very competitive as a company? So right here, a lot of their products that I'm just looking at, these are always in demand. Additives and modifiers, adhesives and sealants, plastic additives, polyethylene, polyurethanenes. Those are pretty popular. I mean, gosh, I remember that OChem and chemistry, how popular this is. Foam control agents, gels, encapsulants, confrontal coatings, intermediates and feedstocks, lubricants, heat transfer, and de-icing fluids. Gee, I would like that in Ohio right now. I heard it's supposed to get pretty cold tonight. Solvents and glycols. I mean, they have all these things. Surfactants, emulsifiers. You name it, these guys have it with chemicals. So that makes them already a very in-demand company because big companies need this. And I can just think of de-icing fluids just when the winter hits in the United States, how crazy it is, or in Canada, or just anywhere else. Those are pretty big things that are in demand. So let's check out their revenue and their dividend history. And this is in millions US dollars. So 2016 it was 48,000, 2017 it was 43,000, 2018 it was 49,000, 2019 it was 42,000, 2020 it was 38,000, then 2021 it jumped up to 54,000. And again, this is in millions US dollars. So right here the revenue is fantastic with these guys, and that pretty much makes these guys very attractive. And as an outsider looking at the trends of the revenue, I can tell just by reading the trends that these guys are in demand. They have a lot of products for that people need. And if their revenue is going up and they're in demand, usually their dividends increase as well. So let's check that out. 2013, they were 32 cents. 2014, 37. 2015, 42. 2016, 46 cents. 2019, 70 cents. They've been stuck at 70 cents. But they're sitting at 68.40 with a dividend yield of 4.15%, a PE ratio of 7.47, annual dividend of 280. So that's not bad at all. And looking at the trends, the revenue is going up. They're in demand. There's potential with them having future dividend hikes. So these are two really good dividend stocks that you guys mentioned to me and wanted to do a review on. So, diversification is important in your dividend portfolio. So, that's one thing to really consider is diversification in your portfolio. Both of these stocks have dividend yields of above 3% or more. They don't appear to be yield traps. They're right almost at the 5% dividend yield range. And that's just very attractive as a dividend stock. So let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to post a video on Sunday. I'm going to discuss my dividend portfolio, just some updates on it. It's going to be short and brief. And I'm actually meeting up with some dividend investors Sunday after my final and my research exam. And these are some people that I've met on Twitter and FinTwit. So I think I launched and just started the first FinTwit dividend investor movement. So I'm meeting up with two people. So I'll let you guys know how that went on next week. I think, let's see, I work Monday. I'll try to pump a video out on Tuesday. So let me know what you think of this video. And don't forget, check out my other video at the end of this video regarding XYLG. I think it's a very solid covered call ETF by Global X. You guys take care and have a great weekend.